Hello, this is the Success Habits, a space where I share life hacks, mindset transforming principles, and habits that I have been practicing, many of them for years, and I think can be beneficial to other people. Hence, I've made the decision to share. Today, I'm going to talk about something I am extremely passionate, and that is financial intelligence. It is very important to stop at some point and ask yourself, how financially intelligent am I? What I've come to discover is that most people are not so much. And that includes many people who have MBA degrees or executive positions at global corporations that I interact with on a regular basis. You may have an MBA and perfectly understand corporate finance, but when it comes to your personal finances, many people end up, if anything at all, just surrendering all their money to a 401k plan. And when I am not intending to say 401ks are not a good thing to have, I am establishing that they should not be the only thing to have. So, also, without pretending to either give professional advice, because I am not a professional financial advisor, or pretend that my plan should work for anyone or everyone. What I'm trying to do is to spark that curiosity for you to go and do your own research and come up with your own financial plan that goes beyond having a 401k. So, with that in mind, I will share what I have come to develop as my work in progress plan. And that does include a 401k that represents about 30% of my assets. And within that 401k, I've made sure to divide those investments not only in US based assets, of which I do have about a 60% in small, mid, and large cap investments, all of them in passively managed, diversified index funds. Vanguard is a great option to look at. And what passively managed means is that there isn't a broker making trades day in and out for which you are paying fees. You buy the investment and it follows an index like the Standard & Poor's 500, for example, and you let it fly with the market, and it has been proven by experts that that actually turns out to work out better than trying to outdo the market. There are some people like Ray Dalio or Warren Buffett that have outdone the market, but most brokers can't. So it is actually much more effective and you pay less fees if you invest your assets on passively managed, diversified index funds. And again, divide between large, small, and medium cap. So again, about 60% of that 30% of my assets, which is my 401k, is invested in US corporations and index funds. About another 30%, and I'm just talking kind of rough numbers, is invested in emerging markets. China, India are growing super fast. So taking a little bit of a higher risk can also yield a high return. So investing only in large and mid cap within those growing economies is a good thing to do, especially if you are younger and can take higher risks. And then the final 10%, roughly, invested in bonds, in securities. So that's a 401k. But then I have a whole other 55% of my assets invested in real estate, tangible assets that are producing passive income. So cash flow producing real estate is truly a fantastic investment if you do it right. And I've heard so many stories about people talking terrible stories about investing in real estate. Never take advice from someone who hasn't done what is advising you on. So when I am not an expert, I am an active accredited investor, And I have been investing in real estate for the past many years successfully. And it is, in my experience, fantastic. You have the asset, your tenants are paying your mortgage, and you are getting a passive stream of income every month from the property. On top of that, you can take advantage of depreciation and tax breaks. So all in all, you have a really, really, really high return on your investment if you choose right. So about 55% on real estate, about 30% on a 401k, about 10% on what I like to call my fun fund. And that is an E-Trade account where I handpick stock from companies that I understand, like, and trust. From one of the many professionals that I follow and speak with, a great term is invest in community happy companies. Companies that wherever they go, they do good for the community and people like them. Companies like Disney, companies like Starbucks, and many more. I don't want to get into the very specific details here, but pick companies that you understand and that you're willing to take a risk. And in that little fun fund, whatever it may be right for you, for me, it's about 10% of my assets. I'm comfortable with that, and I consider it a very high risk investment, and I am ready to lose all of it. And that 10% of those assets, it should be broken down into at least a minimum of 20 different companies. So you should not put all of it in one, as some people unfortunately do. So there is no magic bullet. But for me, it's fun. I have about 60 companies there on that fun fund, and I just enjoy doing it, following them, and I invest in new companies that I think are gonna go up in value. Small companies like Square and Box, LinkedIn, for example, which I like a lot. And then last year was acquired by Microsoft. I made over 100% on my investment, and many others, right? Nvidia, many other companies that have been going up. Again, I am not giving specific financial advice. I'm sharing my personal specific experience, hoping that you go and do your own research. So again, with 30% 401k, 55% in real estate, that's 85, 10% on my fund fund, that's 95, and then I like to have at least 5% of my assets in actual cash so that I have the opportunity to take advantage of good investment opportunities that present themselves, like a property that goes on short sale and I have the cash to go and throw a low ball, and I continuously am making offers that go significantly below what they are asking for, and I'm in no hurry to buy. But at some point you find someone that says, well, yes, we're gonna sell to you, and then you're already making your profit when you buy because you bought low. So that's kind of my breakdown, and without intending it to be the right one for anyone. But what I think is very important is that you should have your own strategy. You should invest the time and energy to create your own strategy and work on it. And you should definitely not only have all of your assets that you work so hard to get in a 401k plan only, right? So those are some of the things to do, which I would call it, if you see it as a ladder, the number one, well, make as much money as you can, right? And invest it as wisely as you can, which is what I just talked about. Create passive sources of income, like real estate. That's a really, really good one. And it's not as painful as some people say. And usually the people who talk bad about it are people who don't even have real estate investments. So don't listen to people who don't have experience about what they're talking. Talk to people who are ahead of you and who have experience. I talk to investors who own hundreds of properties or 50 or 60 units, right? Because they are ahead of me and I want to follow their steps. And those are the people you want to learn from, not the people who have 0 units but are talking about how bad it is to do it. So please don't listen to people without experience. Another one, very important, is, well, protect your assets, right? There are corporations like a limited liability corporation, LLC. you should again seek advice from a professional, a legal advisor on that matter, and see if it makes sense for you. And then another point that I think is extremely important is invest in your financial education. Getting an MBA is good. I did it 12 years ago. It's very good. But you don't learn anything about managing your own personal assets. You should invest in that. There are literally hundreds of books out there. I will recommend five from the ones I read, that I think are pretty good. One of them by Tony Robbins, Money Master the Game, a really good book. And another one is Unshakable, also by Tony Robbins. And you may ask, what kind of authority does he have in financial investing? Well, he went and he interviewed all of the gurus of financial investing, all of them, Warren Buffett, Dalio, everybody. So it is really worth reading. He provides pretty good advice. Another book that I was very skeptical about reading was Rich Dad, Poor Dad by Robert Kiyosaki. Kind of the name sounded silly to me. I didn't want to read it. When I read it, it is actually a fantastic book about investing in real estate. And then I went on to read about 10 different books from the Rich Dad, Poor Dad collection, written by him and his multiple advisors on his real estate business. You may like it or not, but the guy owns literally thousands of properties, thousands. So he may have something good to say. Another very good book on financial intelligence is actually The Intelligent Investor, and this is by Ben Graham. So again, those were just 5 books that you can kind of start with, and hopefully this again sparks the curiosity in you to stop for a moment and analyze your plan, because again, you work so hard to make your money, and just surrendering it, all of it, to a 401k plan is truly not the best thing to do. You should really understand what you're doing, and even within whatever you put on that 401k plan, you should really know what's in there, which fees you're getting, and so on. So this could be a really long conversation, and I guess too long for now. So I'll cut it right there. Hopefully this is useful, and you have a fantastic week.